European markets haven't let the massive ratings downgrade cast a shadow over trading today, with only a slight fall. On Friday, ratings giant Standard & Poor's slashed the scores of 9 EU nations, including the AAA scores of France and Austria. Jim Rogers joins us now via broadband. He's a financial commentator and co-founder of the Quantum Hedge Fund. Thanks for being with us, Mr. Rogers. S&P's announcement, like I said, came after markets closed on Friday. It's been a tense weekend for financiers waiting to see how the markets open on Monday. So far, the reaction calm. What does that indicate?
Well, Ms. Noway, it means that you shouldn't bother to pay any attention to the rating agencies. Everything they've done in the past 15 or 20 years has been wrong. I stopped bothering them long ago. Everybody knows that France is no longer AAA. Everybody knows that Italy is no longer as highly rated as it used to be. The market knows all of this. This is not news. I know you have to report something, but this is not news to people in the market.
Nevertheless, sometimes markets do react to these rating slashes by S&P and other agencies, specifically saying this time around that Europe's austerity and budget policies, which you argue, we already obviously know, are not enough to get out of the debt crisis. What's your view specifically on the crisis and how to get out of it?
Well, the best way to get out of it is to go ahead and let people go bankrupt, let the people who made mistakes take their losses, the banks who made the bad loans, the people who invested in the bad banks, they should take their losses and start over. It looks as though the EU is about to make some of them take some losses, and that will be good. That way we can start over and go forward. The problem, Ms. Noway, is they're not doing enough. They're not taking enough losses. They're hoping that they can get through the next election or two, and then everything will be okay. This is not going to solve the problem. It may delay the problem a bit longer. It does not solve the problem.
Germany's foreign minister is proposing Europe have its own credit agencies. Right now, all the giants are U.S.-based and aren't thought to have a fair grasp on the EU. How do you view Germany's proposal of Europe having its own agencies?
Well, whether it's European or not is irrelevant. The fact is you do need somebody competent and somebody who can examine and decide who is solvent and who is not solvent. You know, it's only until a few months ago that they had the United States as a AAA credit. The United States is the largest debtor nation in the history of the world. It's absurd that it was AAA. No, you just need somebody competent who can go in there. It doesn't matter whether it's Russian, or Australian, American, or European, just so you have somebody competent. And these guys, S&P and Moody's, have had a semi-monopoly for decades. They have gotten corroded and lazy and sloppy, and they're no longer competent.
Let's talk about Greece. The country is struggling to get agreement with its private investors. It needs for the next bailout tranche. How likely is Athens to return to the drachma after March's deadline? It's been a warning, of course. We've been hearing from lots of different analysts that that's possible. Some of them think that that's what's needed.
Well, it's certainly possible. It's not going to be good for Greece if they do it. If they did that, who's going to lend money to Greece anytime for decades? I mean, if they go ahead and withdraw from the euro, then they go back to the drachma. Everybody knows they're going to print drachmas day after day after day, just as they did before. And you're going to have recurring periods of bankruptcy and crisis in Greece. Sure, they can do that. They were a basket case before. They will be a basket case again if they do it. It would not be the best thing for Greece, but it does not mean they won't do it. Politicians do foolish things all the time.
With that said, Germany and France have repeatedly pledged their commitment to the euro, with Chancellor Merkel saying she wants all states within the single currency to stay. How far do you think the powerhouses are prepared to go to prevent a Greek default?
Well, Greece is going to default, Ms. Noway. There's no question that Greece cannot pay its debts. They can do it in an organized manner where they can say, okay, we're going to put this together, we're going to take 50% losses or whatever, or they can just walk out the door and cause a crisis. You're going to have some kind of default. There's a 100% chance of that, whether it's done in an organized manner or a disorganized manner with Greece leaving the euro, going back to the drachma, causing chaos. I don't think that will happen, not this year anyway. It might happen someday, but not this year.
All right, Jim Rogers, financial commentator and co-founder of Quantum Hedge Fund. Thanks for your analysis this hour.
Thank you, Ms. Noway.